This is the talk of Music City Real Estate.
Super Talk 99.7 WTN, the talk of Music City Real Estate.
Where we educate and motivate all things real estate.
This is Monte Mohr. I'm the broker-owner of Realty One Group Music City.
Hey, and this is Carey Ann Cyr, and I'm with CMG Financial and my mortgage team, and it's Sunday night.
Carey Ann, so good to see you. I'm so glad you made it back safe and sound from Florida, downtown Florida, where Disney is. I can't believe you did that.
Yes, we did Disney this past weekend.
You and Aubrey. That's one lucky girl.
She is one lucky girl.
So what was your favorite line to stand in?
Hey, you know what I realized is that there is a degree needed for you to go to Disney World.
Yeah.
You need to master that education, because there is a formula and a science, and I completely failed that with a capital F. But by the fifth day, I figured out a little bit how to manage Disney World. But yes, the lines were quite long. Yes.
That's incredible. Anyway, I'm glad you enjoyed it. I just can't imagine doing that. But, I'm glad my kids and grandkids are enjoying it.
Yes.
So I'm glad they're not.
Well, I think you have to go in with a lot of patience, right? You have to seriously just, because I'm not a patient gal. I like to get to point A to point B really fast. I got things to do. And so there's no rushing.
They didn't care about your schedule, did they?
Except for rushing to get to the ride, And so...
So it's not 1,000 miles longer than it would have been, 5 minutes later.
Right. Well, I got these things called fast passes, which were great. I really was thinking that was going to help me, but you're supposed to plan those out 2 weeks prior. So the earliest fast pass I could actually get was like at 8:30 at night, right? And my 6-year-old usually goes to bed way before then. So it was an interesting time, but it was a lot of fun. She was so surprised. It was a mystery ride, and it was a mystery all the way till we got to Orlando. So it was just awesome for her birthday.
So she didn't know. This is her birthday, and she didn't know where you guys were going.
No, she thought we landed. This was kind of funny. So we landed, and she thought we were in Texas seeing her cousins. And she looked out, and she saw this tree that looked so funny. And she looked at it and said, "That's a funny looking tree. I don't think we're in Texas." And it was a palm tree, And so she was like, "I'm at the beach." She thought she was at the beach. So the excitement got bigger and bigger and bigger when she realized she was going to get to see her favorite Minnie Mouse. So it was a lot of fun. Plus, I have a very energetic and adventurous 6-year-old. So she wanted to go on every roller coaster there was. So she got to do Space Mountain and the Everest ride, and which goes backwards. It goes backwards. It was crazy. Yeah, I need a vacation for the vacation.
I bet you do.
This mommy is tired for sure, but it was a lot of fun. And but you need a second job for that place. I don't even want to look at the credit card statement to know what you paid for that experience. Yeah. So I told her to remember that for a lifetime. I'm not sure when we're going to come back.
You're not heading back next weekend.
Yeah, no. It's going to take another job to be able to get us back there. But it was a lot of fun, and she had a lot of great memories for sure.
You're a wonderful mama to do that. Just the two of you went?
Yeah, her and her daddy went too. So we did a special surprise for her. So it was a nice
awesome.
time.
That is awesome.
Yeah, absolutely.
What good parents. That's fabulous.
And the weather was amazing while you guys were in boats and going up the river, or was that 65? Was it the river or 65?
Yeah, really.
We were going down. Yeah. It was nice, sunny. I actually wanted to stay only because I heard what the weather was doing here.
Yeah, you didn't miss a whole lot here. We had open houses Sunday. I forget how many of them, but it was incredible. How hard it was raining. And bless those people's heart. We still had people at the open houses. The market's still not, it's still cooking out there, even in February in the middle of a downpour.
Yeah, the show must go on, right?
Show must be, go on, absolutely.
Well, so excited to be back with you, Monte, on the Talk of Music City Real Estate. We've been able to talk so many different, topics, and I'm excited about what we're going to be discussing today. We've got a lot of great questions, right?
Ones, yes, and some new ones are coming in even today as we speak. So I'm really. I want to remind everybody, questions at talkmusiccity.com. Be sure and send all those questions to questions@talkmusiccity.com, or you can hashtag them to #TalkMusicCity. we really depend on those questions because we want to. This is not about us. This is about serving Middle Tennessee. This is about elevating the knowledge base in the clarity of real estate and mortgages in Middle Tennessee. That's why we're doing this.
Absolutely. We can gain a lot of wealth through real estate, and understanding it and feeling comfortable and confident with all things related to real estate is just so key. So key. So let's talk. What we got a question here?
So before we get there,
oh yeah, I get excited.
Did you wear your sunglasses down there as well? The ones you have on right now?
No, So I realized
I'm so jealous because I'm going to get rid of these glasses, and I'm going to get some that turn.
Am I turning?
Yeah, you're turning. It's mainly the side that the light is on.
That's too funny. So for those that don't know, I do have transition glasses that I think were buy one, get one free. So I think
one lens and get the other one free. How's that work?
I know, right? But it's so funny because I'm realizing that my eyesight is going, and they won't allow me to have contacts because I can only see out of one eye. So I have to have my glasses. So
looks like they'd be only half price then.
Yeah, you would think.
So.
I asked for the half price deal, and they said, "So sorry, we don't do that." No, I know, it's crazy because one of the glasses should just be a fake glass. It just needs to be, not with a prescription, but. Maybe next time. However, so yes, I wore my regular sunglasses, but I couldn't see a lick of nothing. So I had to keep going back and forth, which I could possibly have just left these transitions on.
Right.
But then I felt I was aging myself a little bit. And I am 29 forever, Monte.
That's right. I'm sorry for bringing it up. I really am.
Come on.
It just that it was throwing me off seeing one dark one. Okay.
I'm always styling. You never know.
I love you, Carey Ann. I just love to get on your case.
You do.
I like to show the folks that just how flexible, how versatile you are when a challenge walks up to you, you just deflect it and just keep on rolling.
Hey, that's how we roll.
That's right. And that's how you have to in the mortgage business because, just like in life, you don't know anybody till you live with them. You don't know what somebody's really telling you the truth till you pull their credit, right? I mean, how's that work?
Absolutely. I mean, I always say you don't want to judge a book by anybody's cover, right? Because, I always even say for real estate agents, you always want to make sure that they're pre-approved prior to you getting them in your car. Well, back in the day, it was getting them in your car. Right. Now people drive their own cars to different places. But, making sure that people are pre-approved because, for some reason, I've heard every story in the book and what they thought. Because remember from previous episodes, what you're seeing for credit scores online and what your current credit score may be could be two different things. And so what you may think is one, because I'm working with a customer right now who thought their credit score was a 660. Which is a great score,
sure.
But it's actually a 584, right? And it's not because he has bad credit; he just doesn't have enough credit. And so things.
So let's pause there for a second because I think a lot of people do go online and it's misstated or misunderstood. Is that because they only got one credit bureau participating in that score, or is there something else going? How did they get that misinformation that far off?
Well, it's actually probably not misinformation, but the freecreditreport.com or the Credit Karma of the world, those types of places are great, and they help you kind of establish yourself a little bit. However, the mortgage firms, they use a different rating system. Okay. And so they have different algorithms within their formulas. And so when they're calculating those rates, those numbers are going to be a little bit different. And so, when you're purchasing a car, this was interesting because I bought a car just recently, and they're usually only pulling your Equifax credit score. And the mortgage firms are going to pull from 3 bureaus, which is going to be a tri-merge. And then the mortgage firm takes the middle of the 3 scores. Okay. And keep in mind...
So it doesn't blend them. It just purposefully goes for whatever's in the middle?
The middle score, right. And so some particular programs that the lenders use are very credit score specific. And so it may be that you need a 640 credit score or a 620, right, credit score to allow for an approval. And so there's been some times where some folks have pulled a 638 score and they want that 100% THDA program, let's just say, which is a wonderful grant program with the state, but it requires a 6 640 credit score. And if you do not have that, you do not get approved.
Wow.
And so we work with a lot of folks, improving their credit. And sometimes it's only for those 2 points that they need just to get that score above that's required. And like we talked in previous episodes, credit scores are based upon many different things, right? It could be amount of credit, length of time that you've had your credit, how many delinquencies you've had within the last year, how much available credit do you have, right? A healthy balance of installment versus revolving credit. So there's many different things that come into play, and how you can get those credit scores. Also remember, since we're on the topic, the higher the score, the better the rate. And so, you're going to be they go into thresholds of 20. So we allow for credit scores with a conforming loan as low as a 580 credit score. So you're looking at a 580, a 600, a 620, 640, right? It keeps going up. 660, 680, 700, 720, 740. 740 is going to be your highest tier. And the higher you go, and as you break through those thresholds, you're going to see an improvement in not only your interest rate, but if you don't put 20% down, your mortgage insurance is going to improve as well. So it's definitely a win for sometimes us to take a moment and really work with a client to help boost them over those specific thresholds.
So the other day I was with a client, and she mentioned that she had one thing on her credit that was holding her back, and that was a medical bill, and she was going to pay that off. Let's say that she paid that off. How long does it take for that credit score to recycle and bump up?
Right. So I always say time heals all. If you're looking to do something immediately and you want that score, depending on what particular account it is, if you pay something off immediately, it's going to be like a bee sting. So it's going to sting you for a hot minute, and then your score is probably going to drop, and then it could eventually, go up. So I always say to consult with the lender before you do anything, because you want to make sure you're making the right moves. They may guide you in a direction not to pay that off. They may ask you to pay down a credit card to boost that score.
Oh, this was a medical bill that was behind, I think, is what that was.
Yeah, and so paying things up to date may be something, but not paying it off. You'll notice that may sting the score for just a little bit. But if you're looking to do something down the road, paying it off today and letting it heal is one that would work. But wow, that first segment went really fast, really fast. Hey, so you're listening to the talk of Music City Real Estate, and we'll be right back.
Super Talk 99.7 WTN, the talk of Music City Real Estate,
where we educate and motivate all things real estate.
This is Monte Mohr, the owner of Realty One Group Music City. Hey, Carey Ann Cyr of CMG Financial. So good to see you.
So good to see you, and we're back. We were talking, we kind of got sidetracked and started talking about all things credit related, but I love that topic,
Great information, lady. Great information.
It really is. I mean, even folks that have really good credit scores, remember that tier goes from that 720 to a 740. So even just making a slight move to boost that credit score up over even 700, 720, 740, like we said, will definitely make a huge improvement on that interest rate when you get to lock in.
That's fascinating. But I think we mentioned this last time that there's really no sometimes rhyme or reason, or is there? I mean, when you, like I said earlier, this lady's going to pay off her delinquent medical bill. Is that worth a certain amount of pointage, or is it just
right? And
it's weighing too many other things out to really determine.
Right. There are some systems, and we have something called a what if simulator, where I can actually plug in if you do A and if you do B, how many points you can receive for that. And now the lenders, when they pull your credit, it allows them to see potential improvements on your score. And so sometimes it'll say you could get 26 points, or you have the ability to get 70 points. I actually pulled a gentleman's credit report the other day, and it was a low fives, 530, 540. It was interesting. But taking the time as a lender, I always tell everybody, read the report like a book. So there's a beginning and an end. And so don't just look at the credit score, look at the whole story. And so I was able to notice that there was potential of 95 points for this gentleman. And so if I did the calculation, that could get me the score that I needed to allow for an approval for this individual. And so we inputted him into the what if simulator. And basically, it was interesting to get 90-something points for this gentleman. He only had to remove himself from 2 authorized users.
Wow.
And so it didn't cost him any money to do.
Wow.
All he had to do was remove himself from 2 authorized users' accounts that he was on, maybe from an ex-wife or a parent or something like that, or even a child that didn't make those payments on time. And we removed that. The score jumped up, and he was able to be approved for financing all within a week. So take the time. Don't just see a score and be worried that maybe you can't get approved, because sometimes the lender can talk you through. And if not, give us a call, because we will talk you through exactly what need to do to get that score up to allow for financing.
What a great tool. That's
it's huge. It definitely has helped so many more families gain home ownership, because again, like we said, certain products require certain credit scores, right? And that's something specific. Right now, we just helped a family who got approved, and they have a 580 credit score.
Wow.
And so again, scores don't always mean bad credit. It just means that maybe there's something on there that's causing maybe that medical collection, like you referenced, that was only $75.
Right.
We've all been in that situation where insurance was supposed to pay it and it hasn't, right? And so little things like that could cause your score to dip down. I always say too that credit reports are only good for 120 days. And so if you're looking at new construction and that home is to be built within 180 days, know that lender has to pull that credit report right after that 120. And some lenders, if not thinking 2 steps ahead, are going to pull it right before closing. And if you and I both know the rest of the story, sometimes something pops up and that score drops down and doesn't allow for an approval. So I always tell my team and train everybody that works with me to, as soon as the 120 is up, pull that new report, give you enough time for the just in case if something popped on there, that we had enough time to be able to clean that score and boost it up to allow for financing and still meet the closing date.
Help me understand, why do you say wait till the 120 though? Wouldn't it be better to do it as soon as you can within that range?
You could.
Okay.
So absolutely. You could do it sooner. Just know that it's only good for 120 days.
Right.
Yeah.
So you want to give it some overlap in case it takes some time.
Right.
On that topic, so if Uncle Bill co-signed for his nephew, how does that affect his credit or just his potential out? What's the responsibility there?
Right. So he is signing that he is taking full responsibility.
So is it full?
Correct. Meaning,
oh, wow.
So if the payments are not paid on time, it is going to hit
so
the
not
report.
Half because there's 2 people.
No,
but he could. Wow.
And so we see that a lot with divorcees. And so you're working with divorce attorneys that haven't told you the rest of the story. But let's say that you get the home and we're on the mortgage together. And I say, no worries, you just take the mortgage because I don't want that responsibility anymore.
Right.
However, I'm still on the mortgage.
Right.
And so I quit claim my rights over to you, but I never forced you to refinance that loan into your name directly. And then life happened for you, and then you happen to be delinquent on the mortgage payments. And so because you never refinanced that home fully in your name solely, I'm now going to be hit with those delinquencies on my report, and so my credit score could drop down too. So always know if you're in that situation, you do want to finish the whole story and require a refinance and allow that person to take full responsibility of that mortgage.
And that takes more than just a divorce decree saying that, that other person's fully responsible. The mortgage company doesn't recognize that, right?
Well, I do recognize that you aren't responsible for those delinquencies. However, I still need the credit score to give you the better interest rate, that particular program. So kind of both correlate with one another. I don't care about the delinquencies per se because they are his or hers due to the divorce decree. But my credit score is now still dinged and it's lower. Okay. And so you now still don't qualify for a home because the score is not high enough. Okay. So it does kind of go together. So it's good information when it comes to the credit scores.
Well, on this topic, real quickly, one of the questions we did recently receive is we are first-time home buyers and do not, they've got a not underlined here, we do not want to make a mistake when buying this year. Can you give us an overall idea of what are the most important things to remember when buying? Now, we know that Well, tell us. You tell us.
Well, there's many different things when it comes to purchasing real estate that are so important. But, my passion and my heart is related, to the financing side, right? And so I solve the biggest problem.
Well, I think that is the biggest problem.
Yeah, that so many of us have, which is the money part, right? And so making sure that we can get you approved for financing and comfortable financing. I always tell people I take an application a little bit different than some others. There are some questions that the lenders are going to ask you. They're going to ask you really what has happened in the last 2 years of your life. Where have you lived for the last 2 years? Where have you worked for the last 2 years? They're going to ask you your birth date, your social security number. They're going to ask you about, do you have a checking and a savings account? Do you have any other assets out there? Different things like that. But one thing that we go and ask clients is, what are you comfortable making monthly for a mortgage payment? And that's really important, because if somebody tells me $1,250, I know that they have budgeted $1,250 for a new house. Mortgages right now, or computer systems, really approve folks, right? And so if you've got good credit, they allow for extended ratios. The computer system does not know what you like to eat, what you like to wear, what you like to do for extracurricular activities, right? And so it's not going to take into consideration any of that. And it also looks at your gross income. And you and I both know that we wish we had our gross income. If you're W-2 like myself, I'm getting a net income. The government's taking quite a big portion of that. So understanding what I'm comfortable making and what I'm qualified to pay are two different things.
So you're saying is normally we would qualify for more than what we're really comfortable with.
Absolutely. Absolutely. So it's important to tell the lender a comfortable payment monthly and really have them back into the approval based upon that versus just getting you approved for a house, because you're going to go out there and you're going to love that house, and then you're going to call me 6 months or to a year or even 2 years and say that you're having difficulty making that payment every month, and now you've been delinquent or now you've moved into a foreclosure, and we never want that to happen at all.
Do you ever show them both? This is what you're qualified for, but this is what you're describing.
Yeah, absolutely.
That's kind of what we do as realtors as well.
Right, and I think that's an important piece too, because you can get so much more house for $50 a month, right? Something so small, and we can change the budget.
Right.
But it is important that you are in that comfortable zone, just so you can make sure that payment is paid every single month. Hey, so we're going to take a quick break. We're going to be right back with you. We're going to continue this great conversation about first-time home buyers and what it takes to get approved today. You're listening to the Talk of Music City Real Estate.
Super Talk 99.7 WTN, the talk of Music City Real Estate,
where we educate and motivate all things real estate.
Carey Ann, we are talking about all things credit. I mean, I've been doing this for a long time, as you know, in the real estate world, and I can't tell you, and I actually used to be a licensed mortgage broker, I can't tell you how much I'm learning personally.
Oh, good.
Just sitting in your presence, going through all this thing, having had challenges with credit years ago, and seeing some of the things that you gave us advice to overcome some situations not that long ago. I mean, it makes such a difference. If somebody's challenged out there, they feel like they're not able to buy a house because of something happened in the past. I'm so encouraged, and I hope the folks listening are encouraged to think about just talking with you, sitting down with your team, and exploring some things that app, not app, but what is it called again? That what if?
Yeah, we have something called a what if simulator that helps a lot of folks. But there's so many folks that you're just talking a conversation that say that their credit is too poor that they can't get approved.
Right.
And they apply for a mortgage, and we find out that their credit score is just perfect, to allow for the particular program that they want to get approved for. So it is. I always say now is the right time, because if working with the right lender, they'll give you the guidance and they'll put you on a plan to be able to become a future homeowner. And that's one thing that we do offer at CMG Financial. We have something called our Future Homeowner Program, which if you do not be approved today, we connect you with a free consultation with someone that goes over your credit. And again, I know enough to be dangerous. I've been doing this long enough, but we do connect you with somebody that specializes in cleaning up credit. And they go through that free consultation, and then they guide you in the direction if you would like to work with them. And it's very cost efficient as well. But a lot of the things like we've been talking about, you can do on your own. And so one little quick tip I will give everybody is if you have a credit card out there, you can ask your creditor exactly when they report to the bureau. And so let's say that they report to the bureau on the 22nd of every month. You want to make sure on the 21st that amount is paid down to at least 50 or 30% of the high balance. And so, of the high limit. And so,
you're not saying paying it off.
Not paying it off, right? Just pay it down.
Pay it down to 50% or 30%.
Right. And if you get it to 30%, you're going to maximize your point potential, which will help you. Okay. And so folks that maybe have good credit but want to figure out a way to maintain really good scores and maximize their point potential to allow them the best option when purchasing a new house, that's the way to do it. So that's a quick little tip.
Wow, that's good. That's great information. So what if somebody doesn't have a lot of credit and hasn't, or they had a challenge in the past and they haven't reestablished? One question I had was that came up the other day is, can a lender use things like utility bills or rent, how they pay that, and can they use that as credit, a form of credit?
Yeah, that's a great question. And so if you are one that is brand new to credit and you are a first-time home buyer, when we pull your credit score, if you have nothing on your report, it's actually going to come across, we call it a no score. It's going to say NA, NA, NA across the board. And so we do have products that do allow for 100% financing with a true no score.
Wow.
But they are going to ask for 3 alternate trade lines that have been paid satisfactory for at least 12 months. And so that could be rent, that could be a water bill, a gas bill, that could be car insurance, that could be cell phone, right? And so you're going to gather 3 alternate trade lines for that. Now, let's say that you are somebody who has just recently moved to the States and you have a job here and you're trying to gain credit here. And again, you do not qualify for that particular program I spoke of. You can work with your local bank and you can get a prepaid credit card. And I always say that you want to get at least a couple. So balance out the amount of money that you would use for that into maybe 2 or 3 credit cards. And it'll take 6 months for those to report and get you a true credit score. So the sooner you do that, the better, because it does take 6 months for those truly to give you a credit score. So that's something to take back as well.
So speaking of credit tricks, so let's go to the other end of the transaction. Okay, I've applied for a mortgage, all is well, and I'm sitting at I've walked into a department store. Pick one.
Okay.
And
I get the discount?
And I get it. Those darn folks, at that cash register, they give you all this tempting, they'll knock off $1 million if you just go ahead and sign up for a credit card. Okay?
Yeah.
So in that act of just a simple, let's go ahead and apply for that. We know that now we know it because you've been sharing with us that could literally disqualify us. How long effect does it have? 30 days, or how do you correct that problem?
No, and again, like what we referenced earlier, it's kind of like a bee sting, right? Okay. And so it could sting your score. But if you are currently been approved for a mortgage, I cannot stress enough that you do not open any new credit. You do not co-sign for a child or a parent. You don't see the discount on that brand new refrigerator and you open up a new Home Depot or Lowe's credit card or anything like that without getting guidance from the lender. And the reason for that is not only will your score maybe be affected, but your debt-to-income ratio could be affected. Now, you may think, example, there's some furniture stores that are 0 interest, I think, right? So you actually don't have a payment, right? However, the lender calculates a payment.
Wow.
So this
is really important information, because what you're talking about is such a simple thing. It seems like so simple, and you've got a house now. You've got to furnish it. So who wouldn't just go in there and take advantage of that? There's no payments for 6 months or whatever. I mean, this is really important information.
Right. And just know that, I always say lenders are like detectives. They're like, Dateline. They find out everything, right? And so it's important that you communicate everything early, because the lender, and all lenders, I think, are using this now. Some lenders actually require a soft pull of a credit report right before closing. We don't do that, but we have a system that lets us know if any collections populated on your report just before closing, and or if you've opened any new debt. And so you have to communicate and talk through that. And we've had multiple times where, hey, I just applied for that, but I never put anything on it, right? Now think about that story. You got to prove to an underwriter that you didn't put anything on it. So there's more documentation required. There's a longer process through it all. So just keeping everything set after the approval is done, and get yourself closed. And right after it funds, then you can work through establishing more credit if you'd like, and get that discount at your department store
after
for that.
Closing.
After closing,
After
correct.
closing.
Yeah.
Wow.
And it's actually after funding. So make sure that
Holy
the
cow.
loan actually funds, which is normally the same day.
Right.
But people are like, oh, I'm closing at noon. Let me shop at 10 a.m. You're like, get to the closing table, sign your documents, let it fund, and then you can do what you need
that'd
to
be
do
such
after.
a heartbreak to be that close and now suddenly be disqualified for something so simple as we had to have a bed. So, and then
Right.
we saw this opportunity to save all this,
And, there are some situations that the lenders look at things like, let's talk about student loans for an example. So many of us have had student loans and need student loans, right, to get through their education process. And so the lenders are required now, even if it's deferred, okay, and a lot of us have deferred student loans, they're required for the lender to count 1% for many of the programs, 1% of the balance.
Wow.
So think about that. If it is, a $40,000 loan or a $50,000 loan, I just helped a lady. I calculated it was $213,000 worth of student loans. 1% of that is really going to push her out of a qualification standpoint, right? And so we have to think through all of that. So to you and I, or to the average Joe, I don't have a mortgage payment. My debt to income ratio shouldn't be a problem at all. Come, let me see some houses, Monty, right? And then we get through the approval and we find out that they're not approved today, or they need a co-signer or something like that, right? And so it's important to know that the ratios that lenders look at could be at the max, right? And so if you go open anything, even though it's so small in your eyes, it could push you over and not allow you to get approved, for financing.
Wow.
Which could make, folks frustrated or, get the excitement out of what you've worked so hard for. So we definitely don't want to do that.
I think too often maybe folks compare buying a car with buying a house. It's just a whole different ballpark.
Oh my gosh. I was expected to have to show, documentation of income. I just stated my income and poof, I was approved,
Did they fog of mirror maybe, just check to make sure you're alive?
Yeah, I was quite surprised since I haven't done that for so long. It was interesting. But let's talk about, documentation, what's required from the lender. So you're going to find out that the lender is usually going to ask for the same things across the board. Now, if you have good credit and you're putting a larger sum of money down, some of these items lessen. We may not need as much, and the lender will talk you through that. But normally, it's 2 pay stubs or within a 30-day period.
Okay.
It's going to be your last 2 years W-2s, 1099s, or tax returns, depending on if you are a W-2 wage earner or if you're self-employed. They're going to ask for a photo ID. They're going to ask for 2 months worth of your bank statements. And a lot of folks send bank statements over that may have a couple $100. I mean, I get 15 pages worth of bank statements and then their ending balance is $200. So think through that as well. I always say right when you get paid, go ahead and print that out, because the lender can actually use a transaction history as well as bank statements.
Wow.
So making sure that everything looks in the best light that you can, because it's a whole story. We're working on making sure that the underwriter sees that you have the ability to repay that mortgage, right? That's what's important. And so you're going to be Again, looking for this documentation. They don't have to be originals. Usually the lender will allow you to scan it. You can upload it and secure links, different things like that. But that's really what they're going to be asking you for documentation when it comes to getting a home mortgage. So I'm excited to keep this conversation going, but I'm being told that we're finished. This segment's coming to an end here soon.
Carey Ann, such great information. Thank you so much for being such an open book with this topic. This is awesome.
It is good stuff.
Super Talk 99.7 WTN, the talk of Music City real estate.
Where we educate and motivate all things real estate. This
is Monte Mohr, broker-owner of Realty One Group Music City.
Hey, and this is Carey Ann with CMG Financial and my mortgage team. Welcome back.
Carey Ann, this is such fabulous information. I mean, this is, if I were a person thinking about buying a home in the next year or so, or if I were even a newer realtor that needs to understand this, one thing I always share with our agents is compensation follows value. And as a real estate professional, you're increasing your value by internalizing this kind of knowledge. This is so awesome. I do want to remind everybody before we go on to the next topic or next continuation, is to remind everybody to check out our podcast on Facebook, the Talk of Music City Real Estate. We have an amazing gentleman here, Jim McCarthy, who is helping us perfect this podcast, and I love watching. I wasn't planning on being able to actually watch us. Listening is one thing, but actually watching and listening is the whole other thing. And we've had a lot of great comments and reviews afterwards. So I'm really grateful for everybody that is watching. But be sure and watch this. If you can't be on Sunday night, be sure and go to our podcast on Talk of Music City Real Estate on Facebook.
And you can always find us now on iTunes as well.
Oh, that's right. iTunes as well. And all questions, please send those in at questions@talkmusiccity.com. That's questions@talkmusiccity.com.
So let's talk about the self-employed.
Carey Ann, for 35 years I've been self-employed. For 35 years I've dealt with this topic right now, and I have a heart of compassion for all self-employed folks. Is because it's like you're guilty till proven innocent. You know what I'm saying? I mean, we are taught to use those write-offs as write-offs, and then all of a sudden, we don't qualify potentially.
Right. Well, the lenders are going to use taxable income, right? And so if you're W-2'd, that's income that's already been taxed. So they can use the gross income from those W-2s or your pay stubs or your current pay. And so when you're self-employed, you're right. We are trained to properly and legally have the write-offs that allow us to adjust our gross income to allow us to pay less tax, and some days I wish I was self-employed or 1099 for that matter, to allow some flexibility, when it comes to what I have to pay the government or the IRS. And with the recent changes with all of that, I am finding as a W-2 wage earner and someone in my field, I don't get to write off as much as I used to be able to. Right. So it is one that I guess you just work harder to make less. But that's a different topic for a different day. But I do want to talk about helping the self-employed. Being in Nashville, there's so many amazing people that are here, whether it is in real estate or singer-songwriters, the folks that, I moved here in the music industry, and I have a great passion for folks that are in the music industry, and I love to help them. You could be a fiddle player at 5 different bands, right? Mm-hmm. And so you receive 5 different W-2s, or let's say it's 3 W-2s here and 2 1099s. Mm-hmm. And, some lenders say, I need current pay stubs for the last 30 years. So, we specialize in helping the self-employed get approved for financing. And that's one thing that I've taken the time to really educate myself on how to help many different folks. There's a lot of these different programs now, whether they're selling beauty creams, right, or vacations, or you are one, that is playing the drums on a Friday night, or singing at Tootsie's, right, or even, bartending or serving for that matter, right, depending on what it is. And so if you are self-employed, there are some things that we need to look at. So when it comes to mortgage financing, they are going to look for a 2-year history, which means you have to be self-employed for at least 2 years. They're
if you were an employee up to a year ago, that's not
Right.
going to work then. 1 year into it's not going to work.
Right. So if I was a W-2 wage earner and then I decided that I was going to fully jump in and take the leap into following my dreams, I would need a 2-year history of that new field, being self-employed. Absolutely.
There's no getting around that, I guess.
The work, so there's two parts to this. So number one, the first part is that you, yes, have to be self-employed for 2 years. Depending on your credit score and how much money you're putting down, you could get around showing proof of your tax returns for 2 years. So we do offer a 1-year tax return for some clients that do qualify for that. And so that is a great option for folks that were starting out their first year and just didn't make as much money, but their second year was amazing, right? And so that does allow for folks to qualify for a little bit more house.
Wow.
You know, I work with so many families that are making great money today, but they don't have a history of that type of work. And so we have to explain to them, you know, that we have to take an average over 2 years unless you qualify for this particular program, right? And so that's important to know, and how we can get you qualified for it. And so again, talk with your current lender. They'll walk you through everything, all related to the self-employed. But if you are one that has written everything off, you know, and there's some businesses that have a lot of expenses, right?
Like real estate.
Right. I mean, there are a lot of expenses when it comes to doing what you do. And so there are some bank statement programs that are out there, which are a little bit more non-conforming. They allow, if you're self-employed for 2 years, to review your bank statements. Depending on the program, it could be for 12 months or 24 months, and they'll take an average of the total deposits there. So that's something else that's interesting and that could help people qualify, because maybe the income is coming in, but you don't show it on your tax returns.
That's typically an 80% type loan, though, isn't it?
There are some specific guidelines. Your interest rates are going to be higher because we're asking less questions, right? So that's going to be a non-conforming type of loan. But as we approach the end of February, many folks may be getting excited to file their taxes. Maybe not so much.
Yeah, I can't wait.
Woohoo! Can't wait to do those. But if you are somebody that is looking to get approved for a mortgage in the near future and you are self-employed, it's really important to make note that if you file your tax returns and you owe the IRS a certain dollar figure, the lender is going to require that to be paid by the time that you close. Or if in your mind you're just going to set up a payment plan, and a lot of people do, they think, no worries, I'm just going to pay $1,000 every month until my $25,000 IRS, bill is paid off. The lender has to use that $1,000 agreement within your debt to income ratio. So you may not be approved for as much as you were before. So take that into consideration as well.
So what you're saying is it might be a good idea to file an extension if you know you're going to owe some money.
There you go, Monty.
I mean, you didn't say that, but
I
so
did
I'm
say
saying
that.
it. You didn't
but you
say
need
that.
to think through. Now, that's if you qualify with 2 years of previous income.
Right.
Correct.
Okay.
You are legally able to qualify and file an extension. Absolutely. But again, get guidance from the lender, right? So if you do file, you have to pay. Now, let's just say that you've already filed and you have set up a payment plan. And you have made it comfortable. So you do qualify for a new home with that payment plan. When looking at a conventional loan, you have to make one full payment before you can close on your house. Okay. And then on an FHA loan, which is the government loan, which allows for more lenient on credit and less money out of pocket, et cetera, they're going to require to show proof that you made 3 consecutive payments to the IRS. And so that you can't make 3 in 1 month.
No.
So that means you and I are not purchasing a home until the 4th month.
Wow.
If you're just recently doing that. So that's why it's so important, if you're self-employed, to talk with your lender, get guidance, and let them walk you through the steps on what move is the best move for you and your family. Again, sometimes it is required that they file their taxes because that income is needed for qualification purpose, right? And so every story is a little different. Every scenario requires different things. So it's really important to kind of talk through again with the lender and see exactly, what is needed for you specifically when it comes to being self-employed. But it is good information.
Wow.
So let's talk about the bus driver. That's one thing. We have to go quick, but I get excited about it. But we'll talk maybe next week on it. But Yeah, we'll save that one for next week,
Okay.
but it's good information about that. But hey, so remember, again, if you have any questions at all, questions at talkmusiccity.com. And if you are someone who is ready to begin the process and get pre-approved for financing, I want to make sure to give you our number here. We'd be honored to help you. It is 615-456-4456. Again, 615-456-4456. That number has a friendly voice answering it 7 days a week, so we'd love to get you pre-approved for a new home mortgage. Thank you so much for tuning in this Sunday evening at 5 p.m. You have been listening to the talk of Music City Real Estate.